Good day, YouTube. This is Jay Money with Falling Forward Financial. For those of you looking to make an income, here's two good stocks to put on your watch list if you don't own them already, or at least watch them. And if you do have either one of these, you can put that in the comments. But I have both of these, so not a lot, just trying to get some more. But these are buy and hold forever. These two aren't going anywhere, so two dividend stocks that could pay you forever. This came out on the 11th, so we have Pepsi and McDonald's. So dividends can amplify those returns too, as consistent reinvestment helps you accumulate more shares during bear markets like this one. So it's hard not to just buy everything in a bear market. I wish I had more money to buy more stuff, so everything's been on sale. So with that in mind, let's take a look at two attractive stocks that have paid and raised their dividends for nearly a century between them. So we have Pepsi, PEP, McDonald's, MCD. Buy Pepsi for income. Pepsi stock hasn't fallen nearly as hard as the waiter market in 2022, and there are excellent reasons for that outperformance. Consumer staples giant has been growing sales quickly, even as people shift spending away from the less essential categories. Organic sales are up blazing 13% on the first half of the year, and earnings are raising too, so can't complain about that. So there you can see the price. Last time I think I looked at it was $150 or $160, I can't remember. So I've been watching some other things, but currently at $170.19, you can see a $234 billion market cap. Days range of $169.99 to $176.26, so you could even trade this one, get a couple dollars play in there. 52-week range of $153.37 to $181.07. Volume at 5,939,000. And there's the dividend yield at 2.70%. So Pepsi is finding room to raise prices, but it's also achieving a higher volume in key niches like snack food, energy, beverages, and breakfast. Stock is attracting investors who are looking for stability in what could be a volatile trading period ahead. But the company has a winning market share even before the pandemic, and right now is extending that positive momentum into a post-pandemic period. So the gushing cash flow means it went forward $8 billion of direct returns in 2022, mostly through dividend payments. Pepsi has raised its annual payout for 50 consecutive years, and there's every reason to expect another boost ahead in early 2023. Next is McDonald's. If you don't know much about McDonald's, watch, I think it's called The Founder. It's about Ray Kroc. I can't say the actor's name right now. I'd have to look it up, but excellent movie. Basically finds the McDonald's brothers and their I think they only had one or two restaurants at the time, and he just saw the future of McDonald's, the way they had their kitchen set up, the system, and Ray was selling ice cream machines, and so it's just an interesting story, but it's called The Founder. I think it's on Netflix, so excellent movie. McDonald's has been raising its dividend for 45 consecutive years, and the fast food titan has a good shot at many more decades of increases on the way. Sales easily eclipsed prior global records after pandemic lockdowns ended in most markets. Comparable store sales up 10% the most recent quarter, in fact, currently at $243.16. You can see it was a $255 stock back in September. $179 billion market cap, days range at 242.41 to 249.43. Again, if you had traded it right, you could make some money. Not that I give tax, legal, or trading advice, just stating my opinion. 52-week range of 217.68 to 271.15. So you got about a $50-$60 appreciation in there. So, and a dividend yield of 2.5. There are signs of stress in business today. Comps were up just 4% in the United States. Market management in July described the competitive environment as challenging. Promotions are becoming more common as consumers' budgets tighten, and inflation is still pressuring earnings. So, McDonald's is in great position to ride out these challenges. Can pivot its menu to favor more value-focused products while relying on premium fare for higher margins. So here you can kind of see the profitability of McDonald's. So it kind of went up, went down after pandemic, and then right back up again. So, and the chain is entering the economic slowdown with plenty of cash, with operating cash flow at $2.8 billion through the first half of 2022. Management is directing much of the excess cash toward investing in growth initiatives like its delivery service. So there you go. Probably have its own delivery service. Constant improvements to its drive-through platform and helping keep rivals from winning market share. The burger giant is used this formula to help it maintain the industry leadership positions for decades, and dividend investors have good reason to expect the impressive run to continue. So, but those are the two. So McDonald's and Pepsi. So, if you have either one of these, you can list that in the comments along with your cost basis and any other information you'd like to share. I'm a Pepsi guy myself. If you're Coke, you can put that in the comments as well. I have Pepsi as well as Coke. Prefer to drink Pepsi over Coke. And don't really eat at McDonald's all that much, but I do have some of their stock, so it's been a growth stock. So, but that's it for this one. If you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, following Ford Financial. Happy trading, happy investing, stay green. Cheers.